What's going on, family? This is not financial advice. Do your own research. Man, I want to put you guys on something. I got some free game for you guys, man. For one, how to be a consistent trader and how we can use the VIX as opportunities to buy. So I like how the VIX, this is the daily chart, of course. I like how the VIX, if you zoom in, you can see that key level, that 35 key level that's been talked about for so much. Strong key level. The VIX cannot get through it. So the VIX, they made one attempt, they pulled back to 25, and they made a second attempt to go higher, and they made a lower high. They gave you a lower high, which was a third attempt to go higher. So it looks like two touches, and then we had a lower high. So they immediately bounced off that 35 and then they gapped down. So we can see usually when the VIX gap down like this, we're going to see a move downward. So I'm looking for a bounce sometime soon. So possibly be a bottom in the near future, because everybody's so bearish on this market, and it's due for a relief rally right now temporarily, but I'm thinking we're going to see some upward pressure within the next coming weeks. If we shoot straight through 25, I know we're in a clear downtrend. We're going to play it by ear, though, of course. Clear downtrend back down to that range around 24 to 20 area. So that'll be a key level to break for the VIX. How we can be a consistent trader, of course, the number one thing is get over our emotions. So our emotions control our trades, and exactly those imperfections that we need to get over with our emotions. So that's number one. Number two is not following your rules. You have to have a set of rules, and you have to abide by those rules and keep taking the same trades over and over. So number three would be giving up, which would be no patience. So you're giving up, you're not seeing a setup, and you're just taking trades. So the fourth one would be trying to get rich quick. So you're trying to make money, and you're not thinking about the process. So the process is most important. Number five would be not studying the charts. You have to study your charts, why you took these trades, and back test them on on when taking your trades. Back test these trades, go back, do research, and trade only clear setups. So clear setups, something that works. So the ones that you take over and over by back testing. If it's not clear, like I said before, congestion is something that we all see on the chart. So we don't want to see congestion on our charts, though we want to see clear setups. When I say clear setups, I mean obvious to see. If you're unsure about what they're doing, of course, then that means don't take a trade, because you would be guessing, you would be assuming. So I want to show you a chart that I saw in particular, which is the SPY. This is what I trade most of the time. I'm going to show you exactly what I saw on this chart when I was charting it. So this is my chart. So I highlighted the key congestion zones that I sat there for an hour and nothing happened. So the SPY is up 2.39%, as you see, and the bias was bullish. So that congestion area was literally an hour. I sat an hour through that until I seen a clear break, which was around 12:15, and I took profits at the high of day. So once I took profits, the market immediately reversed and came all the way back down. So I thought the market was coming back down to the bottom of that range. And as you can see, bad signal bar, took that trade, got stopped out on that trend line. So obviously the trend line was too wide. You had to narrow that. So which they would make an overshoot of that channel, which led to a reversal. So at the end of the day, they shot a big old bar all the way back up to the highs, and then right before the close they had a big old 10-minute bar down. So this just shows you, man, if it's unclear, do not take any trades. So you have to have the set of rules and abide by these every single time. So I know it's hard. Control your emotions and being impatient. So those are the things to work on, and I'll see you guys next week. I'll update you on the $100 week challenge portfolio before I go, and I'm gonna show you exactly how being patient and not panic selling can pay off. So I'm gonna show you the $100 week challenge portfolio. Give me a second, and this is where we're at for the year. So it's May 14th. So this is updated. Everything is looking green on the screen, and I don't know if we're up for the year, but we're close to it. So I'm gonna just show you this. I'm gonna show you my movers, of course. So these are just some that I picked up, and these are not all my plays. These are just the top movers for that day, of course. So it's the $100 week challenge. This is the portfolio. Oxy is up 8.21%. HPQ is up 2.6%. VOO, you know what that is up 2.3%. Corn ETF is down -1%, and Kroger is down -1.5%. So I do want to show you. I'm gonna show you exactly what the bigger picture is in this portfolio. So I'm gonna show you where we're at for the year in dollar amount. So this is where we're at for the year in dollar amount, just $100 a week, and this is where we're at. The overall market is down 20%, as you see, but we're only down not even 1% at this point. So everything is good in this portfolio, and we're on the up and up. So I'm going to keep dollar cost averaging in this until the end of the year, and we're going to see where we're at. You can join this challenge if you want. You can even do $5. So just to let you guys know. See you guys tomorrow. Out.